Bookkeeping can be just another expense if you only use it for taxes, but there's a lot of data in bookkeeping that can be used to help you make good business decisions that actually can increase your profitability. One example is by tracking your gross profit margins, you can know when you should raise prices. For example, I had a client who was considering raising his prices, and so I was able to pull and show him his gross profit margin, how that was shrinking over time. And then in addition to that, we looked at the number of invoices that were being generated from his estimates to see, what his job win rate was. So combining those two pieces of data, he was able to raise prices this year and make even more money this year than last year. Another thing that can be tracked with bookkeeping are expenses. We can track those month over month compared to previous months, and if we see the expenses start to grow, we can kind of narrow in on that area and say, okay, what's happening here? Is this a valid expense that should be increasing, or are we doing something wrong? A personal example of that is my internet bill in January all of a sudden doubled. And so I looked at it and I said, oh, the promotion I was on expired. So I called up the internet company and I said, hey, are there any other promotions available that you could put me on? And so I was able to negotiate that expense. Another thing is estimated taxes. As a small business owner, you don't have automatic withholding from your paycheck like you might on a normal W-2 job. And so by having bookkeeping that's accurate and done each month, you can go back and say, okay, this is how much I should pay in estimated taxes to help avoid tax penalties. So bookkeeping can be more than just an expense. There's a lot of data there that can be used to help guide business decisions so that you can make even more money in your business. Hi, I'm Josiah. If you enjoyed that last video, go to erastusbk.com and click on blog for more.